to go after in regards to Michael, because a lot of my views are tied to the outside market in terms of crypto. Just a brief snapshot on me. Yes, Oasis Pro. My background's 25 plus years, Credit Suisse and Bear Stearns, JP Morgan. I ran capital markets, and then about 5 years ago got into crypto. Oasis Pro is exactly as Marty described us. We're really in the blockchain fintech space and crypto, as well as DeFi. But we're also unique in that we have what's called a ATS, an alternative trading system, that is entirely on the blockchain. We're regulated by the SEC and FINRA. We have launched, and it's really the future in terms of blockchain tech and where it's going for the capital markets. So Oasis Pro is unique in that aspect in terms of digital securities, in that we can actually transact stable coins, cryptos like Bitcoin and ETH, for digital securities. So instantaneous transactions, zero counterparty risk. And about 5 years ago, when I started looking at crypto, I was a skeptic, like many of you may have been or still are. It took me about 9 months to a year to really understand what was happening with Bitcoin and ETH and the blockchain. The two are very separate. So blockchain is a technology that is going to be ubiquitous, in my opinion, in 5 to 10 years in the capital markets and supply chain management, trade finance, all different types, because it's basically a immutable ledger that can be utilized. Crypto sits on top of blockchain, and we can talk about the value of Bitcoin, we can talk about the value of ETH and all these other altcoins, but that understanding, I think, is critical as you look at crypto and decide whether it's worth diversifying into. So and again, we did a strategic raise, 27 plus million. Back in May, it was announced, all strategics, including a subsidiary of FTX and some crypto exchanges. And yeah, we're growing rapidly. Thanks for sharing that. We're at about 30 people right now, and we're hiring. We're hiring a lot of TradFi and DeFi people. So if anyone on this call is interested, please reach out to us. In regards to crypto, so again, going back, when I made the leap, I saw it as a diversification and to the markets, to inflation, et cetera. That was my thesis getting into crypto. Over the last year and a half to 2 years, that has proven to be wrong. And basically, crypto right now is following along where the public markets, the overall macro environment is. So it's really an alternative asset class rather than a complete hedge, similar to any other types of alt investments from private equity, et cetera. That's where my mindset is right now. In regards to Bitcoin, it broke just recently. It broke the critical 20,000 barrier. So I believe today it's trading at 18.8. It got as low as 18.4. There's a sentimental point of 15,000 that if it breaks 15,000, which it may, I'm a bull long term, but over the next 6 to 12 months, I think that there will be a lot of volatility. And if you'd like to get into crypto today, I would buy and continue to buy regardless of what the price fluctuations are. Just due to the fact that there's a lot of washout going on in terms of the small investors are really being washed out of the market, and the institutions are buying in at opportune times. So a couple of things are happening on the Bitcoin side. There are rumors every day, institutional selling. Yesterday, there was a rumor that Bitcoin dropped in a few minutes, like $500. And apparently there was a 2,000 Bitcoin sell order. That's quite large, and through Binance. And that particular order may be tied to what's called Mt. Gox, and I'll give you a little history here. Mt. Gox was a crypto exchange out of Japan. 2013-14, there was fraud associated with it, people were jailed, et cetera. This was the very early days of crypto. What occurred is that they went through bankruptcy, and there are about 137,000, 150,000 Bitcoin that are going through the process of being distributed to creditors right now. And I'm a bit of a contrarian here, because there's a lot of news coming out that those wallets, those creditors won't be selling. And that may be the case for a majority, but because they've waited so long, and I think their price at the time for Bitcoin was $50, maybe 75. So they've already made quite a profit on it. And if they believe that there's a lot of volatility in the short term, just again, based on the macro environment, why wouldn't they sell? That's our view right now. And that we're going to see more downward pressure, especially as the Mt. Gox distributions continue. I believe there was 5,000 yesterday. Several days ago, there was 10,000. And it was supposed to occur in August. It's been pushed out, a longer distribution in September, October. But that's going to be downward pressure in our opinion. The volatility is way down. So you're not seeing as much retail involvement. The institutions are sitting on the sidelines, but are buying options. So if you look at the option market right now, again, for Bitcoin, I'll focus on Bitcoin for the time being. What's occurring is that at the money calls at the current prices, December, January, are being accumulated by a lot of institutions. And they're bullish on Bitcoin in the long term, despite this volatility. I think let's get through this Mt. Gox issue. Let's get through the elections here in the US. That is a component of it. Let's get through the inflationary environment, better footing toward what Michael was suggesting in the previous presentation. And, there's a view from institutions that we've been speaking to that December, January timeframe, there may be an uptick. There may be strength from an institutional standpoint and go into buying in terms of Bitcoin. There's another sentiment. So I talked about 15,000 on the downside. On the upside, it's about 26,000, or 25,000. So there is a strong view in regards to throughout the market of institutions that we're speaking to, that when Bitcoin hits that 25, 26,000 over the next some period of time, 12 months, let's say, that there will be a run similar to what occurred to 40,000 just a couple of years ago from a technical standpoint. So with all that being said, again, I have moved from a hedge to an alternative investment piece for my portfolio. And the macro environment does impact crypto. When there's no news at all, this is just an interesting tidbit. When there's no news, what you find is that crypto tends to creep up. So over the holiday period, we just went through here in the US, basically a four-day holiday. You saw crypto creeping up, and that's been consistent over the last couple of years. When there's no news, there tends to be buying support. Negative news, geopolitical, war, inflation, higher interest rates, energy prices spiking, even though they're starting to come down, crypto takes a big hit. So, where we are right now is we look at the two as being hand in hand. Marty, I actually have a presentation, so I'm going to share my screen if I can find it. Here we go. Oh, Bob, I'll do it.
Okay, all right.
Thank you. Sorry, that's Bob Yospiel. He's our head of business management here, and somehow, I apologize. There it is.
Good to see you, Bob.
Nice to see you, Marty.
There we go. All right, and
Bob's the guy with the short fingernails because he's working so hard.
no excuse. But so here are a couple of slides for you. Market snapshot. Open interest in BTC ETH has been steadily increasing over the last year, while overall crypto market capitalization has been waning at the same time. Now, as you think of this ratio, it indicates there may be more volatility on the horizon, which is, again, the backdrop that I just shared with you. Funding rates in regards to holding short positions have turned negative since mid-August, so a short squeeze may occur. But again, we believe that the downward trend is so strong in regards to selling, going in from a macro standpoint, and then crypto, the ETH and the altcoins. And I'm happy to answer questions when we're through this. We believe, despite the potential of a short squeeze, that most likely you're going to see a continued downward trend, similar to what you're seeing in the public markets here in the US and around the world. Okay. Growth in DeFi. Now, DeFi, I think it's important to talk about this because DeFi is really the exciting aspect of crypto. Bitcoin is not DeFi. So Bitcoin, think about as more of a store of value. Now, ETH has created this DeFi universe. ETH is Ethereum, and there are many applications on top of it. I view it as like the App Store, the Apple App Store of the crypto community. And DeFi is really finance-based for the most part. So think of it as collateralization, securitizations, lending on a peer-to-peer basis. So if you look at this, and Dune, I'd highly recommend anyone interested in the space to go to Dune Analytics. They have a huge variety of different crypto charts, et cetera, and you can plug and play any way you'd like. But this is just about the growth of DeFi over the last couple of years. And as you'll see, it's continuing to grow. It hasn't plateaued yet in terms of total DeFi users. And a DeFi user means they've actually borrowed, they've actually staked, they are earning yield in some way. So it's really interesting from that perspective. Uniswap in the corner right has also grown by leaps and bounds. Uniswap is a crypto peer-to-peer crypto alternative algorithmic market maker or automated market maker. So what it allows you to do is, if you hold ETH and you want to trade it into another altcoin, you can do it quite efficiently through Uniswap, because other participants can actually act as market makers for particular currency pairs, cryptocurrency pairs. So that market is growing by leaps and bounds. And DeFi is really an exciting area. And a lot of the altcoins that you hear about are in the DeFi space. So recently, and I'll talk about regulation in a moment, because that regulatory cloud impacts everything that we're talking about in terms of crypto, especially here in the US and Europe, less so in Asia. They seem to be a bit more flexible in Asia, but certainly in the largest markets in the world. So I trust most of you heard about Three Arrows, 2.8 billion plus loss in terms of default, Celsius, Genesis, Voyager Digital, which basically is being taken over by FTX. So that's all centralized exchanges. So that's one group, not on a peer-to-peer basis, and it's basically similar, frankly, to what Oasis is doing. But what Oasis is not in the crypto space, we're with digital securities, debt, equity, structured products, et cetera. So think of Oasis Pro Markets ATS that's heavily regulated, more like the New York Stock Exchange or anything with an order book. So it's very different from this Cefi, and this platform of centralized finance. is really entirely crypto and altcoins. So 3.0's had an impact on Voyager Digital, Genesis, because basically they were borrowing against each other, and there is no regulation in this area. Now DeFi, because there were what's called liquidations, and everything is code. So when you think about crypto, that's what's so exciting about this with blockchain, is it's all coding at the end of the day. And like MakerDAO is one of the largest, Aave, Compound, if you've heard of the DeFi space. So as crypto prices were going down, and let's say you borrowed your ETH, let's say you had $1 million of ETH and you borrowed 50% on that LTV, $500,000. And let's say ETH went from 2,000 to 1,000. What occurs as it's going down, again, based on the coding in these particular platforms, there's a liquidation point mechanism. And when that liquidation point occurs to protect the ecosystem, your ETH, unless you put in more ETH to keep the LTV up, gets liquidated. Now with DeFi, which is peer-to-peer, that occurred seamlessly. So Maker, Aave, Compound, for instance, saw a rapid decline in prices of other altcoins, and there was no default in that area. So DeFi, we believe, is the future. And but again, from a regulatory standpoint, what you're finding is, despite the advantages of blockchain, which I started with, from a regulatory standpoint, that cloud, that overhang, Chairman Gensler and others are moving down the path of regulation by enforcement. That's been going on for the last couple of years. Ripple being Ripple, which is an altcoin, XRP, is a prime example of that. And we believe once regulatory clarity is in place, which probably will take a couple of years, certainly post the elections coming up, even though there are a couple of bills going through both houses here in the US, it's probably going to be a couple of years away before that regulatory cloud is lifted to a certain extent. There seems to be some turf battles, between the CFTC and SEC, but at the end of the day, the SEC is looking for a solution for regulation of all crypto. And being a banker for many years, I welcome regulation, because then there's more certainty. There's less of a concern with fraud. That could be an issue. Like, am I going to be holding a wallet? Will somebody steal my wallet and take all my holdings? Those are important issues that from a time standpoint have improved dramatically, and the UI has improved, or user experience or interface has improved dramatically, but we still have a ways to go to get more comfort there. And the regulators are focused on this area right now. So the end of counterparty risk. This is important, just going back to 2008 and what occurred, and why blockchain is so important from a capital market standpoint, because of this immutable ledger. As many of us recall, when Lehman had its down, Lehman went bankrupt, there was a lot of uncertainty in regards to what Lehman's actual exposure was. Now, with blockchain and the ability to have transactions done without settlement times, like T+2 or T+10 in high yield and some other areas, or structured products can be T+20. With that instantaneous settlement, a lot of that counterparty risk or balance sheet risk will be known on a real-time basis, and that's what the blockchain really offers at the end of the day. And that's why, going back to my earlier comments of 5 to 10 years, this is going to be ubiquitous, in my opinion, because of the benefit that the regulators themselves will see and benefit from. The other aspect of the blockchain, you can have private blockchains. We actually have a private blockchain as well. What does that mean? It's when a transaction's occurred, it doesn't post on the public Ethereum network, but our ATS is based on the public Ethereum network. So, from a regulator standpoint, who still have uncertainty about miners and, what if the blockchain is hacked, which it hasn't been hacked, the actual Ethereum blockchain in 13 years, that then all the records are online, right? And by that meaning wallet addresses, et cetera. And as long as there's a know your customer, know your business aspect, and all that due diligence occurring, you'll know exactly who's doing what trades. And by that, I mean the regulators, because you will be anonymous like you are right now.
Pat, we got a few minutes and some questions here. So
okay.
If you want to just run through your slides quickly, and then we can get to the questions. But we got 3 or 4 questions here, and
yeah, absolutely. So real world assets, so private markets. So a big part of the transition in regards to our ATS and the blockchain ATSs that are cropping up like ourselves is real world assets like funds. Think of yourselves as an LP. And you hold many private equity funds or credit default funds, whatever it may be, with the opportunity to tokenize those and put them on an ATS like ourselves there. And we're having a lot of discussions with major fund families. One of our investors back in May is actually the largest fund family in Korea, Mirai, and Mirai runs about 800 billion or thereabouts. They also have funds here in the US, and their interest is to eventually tokenize all their holdings and allow it to trade with zero counterparty risk. Now it's lower cost, increased safety. If there are distributions, it's actually easier for them to do without third-party vendors handling all that. So as the private markets increase and grow, the opportunity to take these private market illiquid assets, put them on the blockchain through a regulated entity like Oasis Pro Markets is where the future is heading. So that's what this slide is talking about, is the growth of the private markets. And then compliance is key, KYL, AML checks, and with KYC as well. And the movement of the regulators in terms of coming up with solutions. Again, it's going to be regulation by enforcement. We expect a lot of actions recently that eventually will get to the point where this market will really grow. Now, going back to just quickly investments, Bitcoin, ETH, what we're sharing with institutional investors in our view is, again, just to close the loop here, what our recommendations are is now's a good time to go in as any, continuously buy, dollar cost averaging in a way, pick your spots, because it's going to be very difficult to find the bottom. But as you're seeing with some of the information I shared in regards to the growing usage and what's occurring, in terms of these altcoins and the benefits into DeFi, that in the long run, we firmly believe that the prices are going to be significantly higher. I'm not Tim Draper, who I know, who's called 100,000 Bitcoin. He's called 250. He may be right in a few years. We're very focused on over the next 12 to 24 months, and we believe certainly the prices are going to be higher 12 months out once these recessionary fears fall away, and in regards to hopefully the next bull market here in the US. So we think there will be ample opportunities for growth there from an investment standpoint.
Yes, we had a couple of questions here. Sam, do you want to ask?
Yeah, hi Pat, Sandy, Expansion Capital. Great to see another Wharton night, and congrats to your success.
Thank you.
I'm not a trader, I'm an investor. If I wanted to invest in blockchain crypto, can you share real life utility applications on the blockchain, in particular decentralized applications? Because there's a lot of action going on, but a lot of it is really centralized. The exchanges are central. Even Luna, it was central. So the promise of Bitcoin and blockchain, my understanding, is really decentralized and smart contracts and whatnot. can you share examples of real life utility that would justify whatever growth projections you're saying? Thank you.
Sure. So Bitcoin is, I wouldn't view Bitcoin as DeFi. Bitcoin is more a store of value, right? Because Bitcoin's not a smart contract. You can wrap Bitcoin with ETH and enter the DeFi space, but Bitcoin on its own, just to set the playing field, doesn't involve smart contracts. Utility, well, I'll tell you, in regards to RATS and the Ethereum blockchain, very big bull on Ethereum. And there are other layer one protocols on top of it, like Avalanche, Solana, that you may have heard of, and we're fans of several of them. So I'll give you just the example of RATS. Okay, so RATS actually uses smart contracts. So there's an order book. You have XYZ security, and you have USDC or DAI, right? And you want to transact between the two. Once a match is made, a smart contract actually handles the actual transfer of those securities, utilizing custodians and transfer agents, which is 3334 Act responsibilities. And that's all done through a smart contract. Now, another aspect is from let's think about employee options, right? Very intensive, time intensive, because employee options are, vary with each employee, right? Different start dates, vesting schedules, et cetera. All that can be built into a smart contract as well. And then allow, without having to go through approval processes, you can trade on that as an employee when your vesting schedule allows. In terms of, another example is loan documents, bank loans. The secondary loan market's really run by 5 of the largest banks. You can actually take loans, corporate loans, incorporate them into a smart contract, again, with coding, with all the particulars of that particular loan, right? With all the addendums. So all that information's available for anyone who, and when I say anyone, most likely institutions, you can actually define who, at the end of the day, can look at these documents. They can go through all the documents, including all the addendums, most recent financial information, et cetera. And rather than going through a settlement period of, could be 20, 30 days in the secondary loan market right now, it could be done much, much faster. It could be done in a day in terms of transaction occurring, because all the information through that smart contract is available.
Pat, we're out of time, but wait, one last question, one more question. Yes.
Do you have the bullish and bearish arguments for the recent Ethereum fork between the Ethereum Classic, proof of work and proof of consensus, all that stuff? Thank you.
Sure. So yeah, that's coming up, I think, on the 15th to the 19th. And yeah, we expect a bit of a pop when that occurs, because this has been, I don't know, from a crypto history standpoint, this proof of work to proof of stake has been promised over the last 3 years, and the time period keeps getting pushed out. So step one is actually happening now. There's several other steps over the next couple of years, and yeah, we expect a bit of a pop there. There's also ETH POW, which will get forked, and there's an indication in the markets that the value of that may be anywhere between 1% to 2% of ETH value right now. So if you hold ETH, you'll have an opportunity to also get ETH POW once that hard fork occurs based on your ETH holdings, and there may be value there. So very, very short term, there is an opportunity in taking a bet on the merge coming up in a week or two.
So bullish on which one? At ETC or ETC or ETH or?
I'm not an ETH Classic guy, so just ETH.
Okay.
Fantastic, Pat. So don't go away. So we're gonna have an event in Miami. We'd love to have you speak on the this regulatory and tokenization of assets aspect. I mean, you remind me last year, as you know, we were in Austin, Texas during South by Southwest. Everything was NFTs there, but I think that people haven't really hit the tokenization of assets core yet. And I think there's some regulatory uses around it, right? Which is around accredited investors or not, right? Because there's no reason why a PE fund couldn't tokenize their assets, but then there's a question of whether you can sell those tokens to non-accredited investors, right? So
Yeah, that's
so I think that's a regulatory issue. I don't want to address it now, but I think we have to. I'd like to address it in December or November.
Let's do it.
When with a couple of other people, we can grab you for a panel. So, but fantastic. Thanks for bringing us up to date, because I know it's an issue. So many people here have invested in crypto and are continuing to look at it. And as you said, this ubiquity of crypto in the back office is happening in banking at lightning speed. People just don't understand it. But I'm talking to at least 2 or 3 people who are talking about rolling out crypto banks, right? So it's really fascinating, and
We'd love to talk to them.
Yeah, absolutely, fantastic. All right, Pat. Listen, thanks so much. Great job.
Thank you.